Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Great to be here with all of you. I'm Seth Udinsky, Samuel Case, and with our host, Mark Manila. Mark, good morning, brother. Great to be here with you today.
Good morning, and welcome, everyone. Glad you're here with us today.
We certainly are, folks. We want to hear from you as well. 610-363-1110. Again, the phone number is 610-363-1110. You can queue your call up right now. Phone lines are open. We would love to hear from you. 610-363-1110. Our topic today, fellas, is an interesting one. Bot trading, algorithmic trading, using AI in trading. Very interesting stuff here. Mark, I'm excited to hear your thoughts about this. And folks, you all as well, if you've got comments or questions, join the conversation. Let's kick it off here, though, guys. Sam, give us just kind of a quick rundown of this definition of algorithmic trading. When I think of it, I tend to think of AI, but we've actually seen algorithmic trading, Mark, quite before the genesis of the AI movement. Sam, give us the details.
That's right. Dating back to the 1980s, we've seen this. So it remains to be seen if robots are taking over the world. But for one thing, we do know that they've already taken over the markets, because since then, it's estimated that approximately 80% of the daily trading volume in the U.S. stock market is driven by these algorithms, which is basically using a computer program to execute trades based on predefined sets of instructions, aka algorithms. These are based on various factors you can choose from, such as timing, pricing, quantity, or really any mathematical model you want. While there are advantages to this, there are things like speed and efficiency. It also carries the risk of failing to account for real-world market conditions as well.
So, Mark, I guess just to kick it off, you know, we're seeing this AI movement. It's having an impact on the markets because it's driving the tech sector, it would seem. But how is AI changing the way that trade algorithms operate now?
Oh, that's a great question. I wouldn't confuse AI with what we're talking about, bots and algorithms, even though it's slowly getting in there. The problem with AI is it's not consistent. It's not even truthful. It's not reality yet. If you notice on any of your AI chats or whatever, it always says at the bottom, the information may not be right. Check it, you know. And that's because large language models don't know what they're saying. They're just saying stuff based on what they're picking up from the internet or elsewhere and trying to put it together. Now, AI is being used a little bit, but it's a smaller portion of what's really going on Wall Street. What's really going on are that the incredibly large organizations are putting together computers and putting them right next to the stock exchanges computers, so they can get information a millisecond faster than you or I. They can even see trades going in and have alternate trades to offset those trades before the original trade hits, things like that. So effectively what they're doing is rigging the system just for these hedge funds and these large corporations who couldn't afford microwave towers and computers next to the computers at Wall Street. They're the ones that are causing these flash sell-offs, these flash crashes and flash run-ups. And what happens is one bot, one algorithm signals a sell, others see that and they start selling too, and it cascades for a bit, and then another algorithm says, oh, we've reached our bottom point, now is a good time to buy in, and then it flashes back up and the cascading goes on. And it just, for the average investor, it just feels rigged. No matter what you do, you can't win trying to follow the trend or follow the norm, because the trends are now in minutes and hours, possibly days, less so weeks than they were 20 years ago. So it makes it harder for people to invest and try to keep up with these things. And it starts feeling like, I can't win, you know? And the bottom line is, if you try to play their game, you can't. But what does win is to continue down that same road that we have been talking about, teaching and preaching for since the beginning of financial issues, and that's long-term investing, not trying to knee-jerk react to anything, but create wealth one step at a time by buying strong companies over a longer period of time and not having any knee-jerk reactions to what's going on in the market. If you don't play their game, they can't beat you. Bottom line.
Now, Mark, I don't mean to get into the weeds here, but this is a question that came to mind. When we use, for example, if I make a trade on my Fidelity platform, that's a human act of volition that I have made to make that trade. But is there algorithmic trading at play even in that also, just simply by the fact that I'm using an electronic source?
Well, no, not. I guess you could say yes in the sense that you're transmitting your trade, but really it's going to the platform. The platform is then probably, in most cases, combining it with other similar trades.
Right.
And there's things going on. They're not trying to manipulate the market with it. They're just executing. That's different than, say, something that sees some, I don't know, maybe undervalued stock and decides to run it up, but at the same time is using some options so that after it runs it up so far, it starts running it down. See, there's manipulations like that go on, and then they make the money off the options. And anyway, it's a little bit crazy. We would call it cheating. Most people would call it cheating. Occasionally, some people get fined for it, but I haven't ever heard of anybody going to jail for manipulating the markets like that yet. With the bots and the algorithms. But it feels like it should be cheating, and maybe the SEC will get ahead of it too. It's efficiency.
Yes, that's right.
That's what it's called, efficiency. Yeah.
Well, guys, it's interesting because you can definitely see where my mind goes. I played baseball growing up, and in baseball you have something called a competitive edge, where it's basically almost allowable cheating. Stealing signs. For a long time, steroids was a competitive edge. Now baseball's cracked down on it. Is it kind of that same idea, Mark, where everybody's trying to get the tiniest competitive edge? Yeah.
I think that's a great example, Seth. That says it right now. It's not considered cheating. It's not. It is considered efficiency or excellence or whatever. There are some. It creates a little more liquidity in the market. It also brings down the cost of trading because of the amount of trading that's going on and everything. So there are some positives. So they say it's efficiency and progress. But I think we'll see. Regulations always follow the path. They don't create the path. So technology is creating a path, and SEC is following that path now. I don't know if they'll ever catch up to it or if it'll always stay one ahead. But we don't have to worry about that because we don't invest like that. We're not trying to make millisecond trades here. We're trying to make wealth the way God called us to. The other thing about this that really irritates me is the stock market originally, it was to raise funds to help business get started. And then once that's happening, people could trade those stocks, the stock they own in a company, back and forth on the exchange to help them create wealth without having to start their own businesses, as we do in our 401ks and things like that. Help us create and store up wealth that way. Well, the stock market now is changing because of algorithms, because of computers, because of bots, and I think will eventually, because of AI even more so, is changing to be more like a casino. Nobody cares if value is created. Nobody cares who's getting hurt or why. Nobody cares about the economy. They just care about one more penny, and fast trading will help generate those pennies over and over and over again. So it's less about value, less about quality, less about the society as a whole, and more about I, me, mine, and all I can get right this moment. Bottom line again.
Mark, it's refreshing to think about the way that we do it here at Financial Issues compared to the way that the rest of the world does it, because you're competitive edge, whereas our first rudder, if you will, or the thing that steers us, is the wisdom that comes from God. So it's a human volitional choice that we make that has to be governed by the Word of God. I think that's actually definitionally what biblically responsible investing is, because it's investing that is responsible according to the Bible, right?
You're absolutely right there. Yeah, and like I said, if you don't play their game, you can't lose to them, and you will lose because they have hundreds of millions of dollars and they have technology you don't have. But if you play the cards, things, build wealth strategically over time, systematically, and in a God-honoring way, we win. And they can't beat us that way.
Yeah. And, I think we have hundreds, maybe thousands of partners out there who can testify to the fact that not only does our strategy work from a spiritual perspective, but it actually also works from a wealth building perspective, too. That's not a guarantee that you're going to make money, but it works.
All those millisecond trades, the thousands upon thousands of millisecond trades that are going on, they're just noise when you look at it from the long-term investment perspective. And they're just noise. And you've heard me talk before, we try to get away from the noise. We try to ignore the noise and look at what a stock's made of and its potential of value, not of just creating instantaneous wealth like a lottery.
Mark, I'm interested to see where this conversation goes because, of course, AI is growing in its influence with this. We'll talk more about that on the other side of the break, folks. Nelson, I see you in the call queue, brother. We'll get to you in just a moment. 610-363-1110. We'll be right back after this.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life, and some make life worthwhile. There are decisions to stay, or to go, to remain the same, or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common, the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
In a world where financial decisions can feel overwhelming, it's easy to lose sight of what truly matters: our family, our faith, and our future. With financial issues by our side, we can invest knowing that our financial decisions are in line with our values. Take the first step today and become a financial issues partner to access rich online resources, training tools, and guidance for biblically responsible investing. Head over to financialissues.org and learn how to invest your money in a way that honors God. That's financialissues.org.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
610-363-1110. We got some calls in the call queue. We'll get to you guys in just a moment there. Did want to tell you our show sponsored in part today by our friends at Samaritan Ministries. We're so grateful for what Samaritan Ministries does. Later in the program, actually, Joel Noble's going to join us. Many of you have been asking, how do I best utilize Samaritan Ministries if I'm on some form of Medicare? We're going to talk to Joel about that, so I hope that you will stay tuned for that, folks, because I'm sure many of you, you're probably wondering that. Again, 610-363-1110. Mark, we got Nelson in the call queue from Louisiana. Why don't we go to Nelson here? Nelson, good morning. You're live on Financial Issues.
Good morning, guys. Mark stole my conclusion about AI earlier when he said it's a whole lot of garbage, but I'll give you a little bit more detail. I was rebalancing my portfolio. Basically, I've been working on it most of the year. I had too many positions that were too small. And as I was working on it in the Edge browser, I noticed this little funny folded over blue and red ribbon. I said, well, I wonder what that is. I clicked on it and Copilot opened up, which is Microsoft's AI. Yeah. And it allows you to select ChatGPT as the brain behind it. So as I was rebalancing, naturally, I'm looking at all my positions, trying to consolidate, pick the losers, pick the winners. And going into the brokerage, I use Fidelity, a lot of clicking, a lot of reports that conflict each other. So I said, hey, this AI stuff's supposed to be helpful. And in reality, when I first started using it, it was because I could ask it for price targets and some basic stuff about companies, and simple questions came back with reasonable answers. Well, yesterday, the reason I missed the first 30 minutes of the show is I started at 5 o'clock trying to build my portfolio into the AI. It was making so many mistakes. It assumes so much that is wrong. Yeah. It just guesses at a lot of things, and then you tell it you're wrong, and it says, oh, I'm sorry. I hate to break your confidence in the system, but I used an assumption. So it would assume everything.
Nelson, I think you're experiencing the truth about artificial intelligence right now, especially with things like ChatGPT. There are other structures out there, different types of engines, but a large language model, and it's putting together, it doesn't even know what those words mean. All it knows is it has a formula where it goes out to the internet, finds these things, takes a consensus on these things, and brings back the ones that seem to be most true, and then connect words together with it. Be very careful using AI for investment, especially if you're a long-term investor. There are biases built into it, by the way. Oftentimes, if I'm playing with ChatGPT, I'll say, let's talk about this, and it'll give me at least a left-leaning perspective on it. And I'll say, no, I am a right-wing Christian investor who loves God and puts God and country first, and I want it from that perspective. And it reluctantly will restructure some of the comments now and flip it the other way. So it doesn't care, it doesn't know, and all it can do is repeat what it's grabbing off the internet or off the information in the servers that it's been trained on. You can upload information to it, but it'll only have that information for a very short period of time in that chat box that you're in, that sandbox they call it, in that chat. And during your conversation with it, it may even lose that information it started with. So when it starts telling you different things from what it did in the beginning in your session, it's because it's clearing out information in that little box that they gave you to talk in. Anyway, that's more than anybody wanted to hear, but I would say at this point in time, unless you're a multi-billionaire or multi-millionaire and you can have a server farm of your own and you can set up your own AI, I would not use it, or at the very least, go out and get some artificial intelligence that was designed specifically to analyze market information. Does that help, Nelson?
Yes, pretty much you're dead on all your comments. I would say that for really simple questions where it can pull hard, real data, it does come back with some reasonable answers. So I guess your caution is very pertinent, is just use it sparingly for specific queries. And, I'm not going to make a decision based on what it says.
You can use it for research, but I think we had, Sam, don't we have a little bit of a headline on something about AI and stock picking?
Well, it's just about financial advice in general. It was a survey that found about 1 in 5 Americans said they've lost more than $100 by following AI-generated advice for finances. For Gen Z, it's about 1 in 4 because they're more likely to use AI for this kind of stuff.
Okay, yeah, that's kind of general, isn't it? I wonder if that was generated by AI. Right. Bottom line is, I think they need to do another survey. How many of you lost more than $100 by just doing the research and picking something yourself? I think the numbers would be similar or more. So that doesn't really degrade the trust in AI when you look at the numbers in reality.
Needs your counterfactuals, Mark.
Yeah. It just means that AI is as silly as most of us are when we don't research enough, or we go for the short-term gig instead of going for the long-term. I guess that makes sense to most of our partners here who understand long-term investing doesn't mean we hold on to everything long-term. It just means we try to find those stocks, those companies that are made of real steel, that have great revenues, that have great metrics to them to begin with, that aren't over-leveraged, that are there to create value, that are putting their money back into their own company to develop more products and services and make them more efficient, and then giving dividends to those people who own their stock. Dividends meaning paying the owners some of the profits. So we know long-term investing means going for value, going for companies made of steel and holding on to them till the world or the company itself starts self-destructing. Then we don't mind getting out of them if something changes like that. But the goal is to find the better stocks for the long road, for the long haul. And that's what we want. That's what we do here in our selections of buys. We look for those kind of stocks that have that potential and have a lot of upside potential. I mean, there are stocks that are made of steel, but they're going nowhere because their products and services are yesterday's products and services and are slowly going away as other companies develop new products and services and they don't. So eventually you'd want to move out of a company that is not growing, that doesn't see additional revenues, does not see additional profits. And that's what we're looking for here at Financial Issues. And that's what you get when you get into the back end and you become a partner and you get to the partner hub, and you can go look at the buys, you can go look at the holds, and you can go look at the sells, you can look at the asset allocation and make that portfolio. And then when 62,000 bots all start cascading down and you see something dropping like a rock, you go, that must be those silly bots. And then it bounces back up and you say, yeah, that was bots. And you don't have any sweat, you don't have any tears, you just continue on happily enjoying your family, enjoying life, and praising God.
That's awesome, Mark. Appreciate that. Nelson, appreciate the call too, brother. That's great. Sounds like you've really got a good handle on using that potentially dangerous weapon of AI.
Yes, thanks, Nelson.
Absolutely. Appreciate you, brother. Hey, Mark, I think we've got time to go to Brian from Illinois. Let's get to Brian here.
Let's do that.
From Illinois. Brian, good morning. You're live on Financial Issues.
Good morning. Yes, I have
good morning, Brian.
About the, yes, good morning, Mark. I have a question about the portfolio tracker.
Okay.
When you enter the stock symbol and you go to the sector column, is it something I'm not seeing, but you have to manually enter the, I'm doing it right now, the stock symbol and the sector and style and industry. I was wanting to know if the sector could be automatically entered when you enter the stock symbol, because if you pick the wrong one, it's going to throw your whole portfolio off. It's just, I don't know if it's something I'm not seeing that it does that, but I have to manually enter it, and if not, I just wanted to suggest that.
Mark, I can actually speak to this one here. Yeah, Brian, that's a great great suggestion there, brother, and I think that's certainly something that we can be looking at to try to update for sure. Typically, the way that I do it right now, and Mark, you can speak to this too, is you have two tabs open and you search the one tab, and that can be a little bit cumbersome, Brian, for sure.
Yeah, the easiest way, I'll give you the short solution right now is you open two tabs and then you separate them from the browser. So you have one on the left side, one on the right, and they're both open simultaneously. You're watching that and you can do it. But Brian, which you're bringing up, you could be my brother, because I have a wish list of stuff for the back end. The last update was great, and now our goal is to take it further and do things like this. I love that idea, and that is something we've already talked about, and it's on our upgrade list as we move forward. So hopefully we'll see that. I don't want to say when or how, because first of all, we have to work through it, make sure we understand exactly how to do it, and then make sure the programmers understand it, and then we have to have them do it, and then we have to test it, and then we can launch it. But there's that and a few other things are on our list. I would really like to see it come down to be as simple as possible for you to set up your portfolio. Maybe click on allocation. When you click on that slice of allocation, it gives the buy list there. And you click on those and put your percentage next to it, and it fulfills it for you into your, these are the kind of things we're talking about and talking with our tech team on to put together for the next phase of the back end for the Partners Hub. So thank you. I love these ideas. And I want to encourage everybody, if you have ideas for the Partners Hub, for the allocation page, for any of that, send them in. We want to hear them. It's not that we want to stop doing this. We want to make for you and for everybody who's coming on board now. We're seeing a little bit of an uptick in partners, and we want to continue to see that. And the best way to do that is to add value to what we're doing.
And Mark, I'll just say too, there's some excitement with this because of how well our partners showed up and monthly soldiers showed up. We exceeded our goal that we had to end the last fiscal year. We're able to, have that extra money. I don't know what that money is going to be used for right now, but the opportunities to make those website updates, because it does cost money. That's a great start. That's a great start.
I did not bring that in part of the conversation of what it takes to get updates done, but it also costs money.
Yeah, for sure. Brian, thanks for bringing that up to us, brother. That's great. Mark, I appreciate your words on that also. Folks, we want to hear from you. 610-363-1110. Again, 610-363-1110. Join our host, Mark Manila, here on Financial Issues. We got more coming on the other side of this break. Don't go anywhere.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. Well, why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant, and my family, they were like, no, you're not having this baby. I met Miss Linda. She told me about all the great resources, like they offer free baby clothes, they offer free classes, stuff for mom. She prayed with me. She told me to ask God to, guide me to my decision. She made it completely like my choice. She offered to get me an ultrasound, and I found out I was 6 weeks pregnant. That's where I very first heard the heartbeat of my son, and I was sold. Whatever I gotta do, whatever comes my way, I'm just gonna, have this baby. It was really a great thing that I was led to the choice to keep on.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
610-363-1110. You can cue your call up right now. Mark, I enjoy so much, getting to listen and chime in where I can, but really just get to listen to your wisdom with our callers. It's one of my favorite things on the show. And I talk to the callers. It's awesome.
Not that this is a love fest, but I really appreciate your knowledge of the Partners Hub and how it works now and where we're headed with it. So thank you for jumping in there.
Absolutely. And I will say this too. I don't know if we shared this on the air or not yet, but our final numbers, folks, for our fiscal year-end campaign was somewhere in the neighborhood of $192,000. That's over $30,000 more than we had targeted for. So we are in a great position moving forward. And when we're talking about these back-end website updates, that's awesome because it does cost money to do that stuff.
Yeah, it does help with that.
It really helps. So, Brian, to your question that you just asked, there's some good things ahead for sure. So thank you for bringing that up, brother. 610-363-1110. All right, folks, we have a guest on the program here. I'd like to welcome Joel Noble. Joel's a friend of the ministry, friend of ours. He's the director of public policy at Samaritan Ministries. Again, we love Samaritan Ministries. They are faithful partners of FISM. If you're interested in learning more about them, you can check them out at SamaritanMinistries.org. Joel, welcome back, brother. It's wonderful to have you on the show with us.
Well, thanks for having me.
Absolutely. So, Joel, I really wanted to focus this interview on a question many of our listeners have given us concerning Medicare. We have a lot of listeners who are in that age where they're on Medicare or they're getting on Medicare, and they're wondering if there's a way to use Samaritan Ministries in conjunction with Medicare. Let me ask you this first, Joel. Why would listeners want to do this?
Yeah. So for 30 plus years since Samaritan's been around, we really didn't have a separate option for seniors. And the downside was that you're on Medicare and 80% of your needs are being met by Medicare, and it's you're asking the other members in Samaritan help with that 20%, but your share is still the same as someone that's 40, 45 years old. And so what we were trying to do was kind of even that out and make it more equitable and more affordable for those over seniors. And what it offers is the same thing that Samaritans offer 30 plus years, the freedom to see the doctor you want, knowing that your shares are going towards other needs and not going towards things that violate your religious beliefs. And so it allows you to continue being a Samaritan member and getting all the benefits of being a Samaritan member and also take advantage of Medicare.
Now, Joel, when you're talking about, back end of Samaritan, if someone were to sign up for Samaritan, but they're already on Medicare, how might they go about doing that? Is there a different sign-up process, or is it really just basically the same as if you were just on Samaritan Ministries? How does that work?
Yeah. So we've, as I said, 30 plus years, we've had a couple different programs. We call them Legacy now, Classic and Basic. That's what most people are familiar with Samaritan. But over the last few years, we went off and built a new program we call Redeem, which is much more automized. It's less of having to send a physical check, which a lot of Samaritan members are used to, and it's more digital. So with Redeem comes this program that we call Senior Saver. So if you're a Samaritan member already and you're looking for this program, you would look at Redeem or just call in and ask about Redeem. Or if you're not a Samaritan member and you're just looking at our website, Redeem Health Share is what you're looking at. It's our new program, and with that comes our Senior Saver.
And Joel, lay out for us just for a moment the advantages of using Samaritan in conjunction with Medicare over, for example, just using Medicare Advantage. What are the specific advantages that Samaritan as maybe a coming alongside health sharing supplemental coverage might offer?
Yeah, absolutely. So as I mentioned, it offers a lot of the same benefits that our Samaritan members are already looking for. One of the difficulties was folks loved Samaritan. They loved being able to choose their own doctor. They loved knowing where their share was going. And then they turned 65, and it was just not honestly affordable. They didn't want to have to pay a full share, and they felt like, okay, just to be a good steward of my money, I should probably just go with Medicare Advantage, or just not have anything, just go with Part A and Part B, which they're already going to be buying into. And so this offers them an opportunity to stay with Samaritan, to stay with something they love, and not really have to make that hard decision and drop off. So I mean, hated, losing members at 65. We had members that stayed on and, would use us alongside A and B and pay that full share. But now, we made it more affordable, which is what we were hearing from our members for years. So everything that you love about Samaritan, you can continue having, continue loving, and even when you turn 65.
That's great. Folks, you can learn more about this at SamaritanMinistries.org. Again, that's SamaritanMinistries.org. Joel, I'd like to ask as a final question, how can our listeners pray for you and for Samaritan Ministries? I know you're on the front lines being the Director of Public Policy. How can we pray for you?
Yeah, I appreciate that. So currently, starting yesterday and right now as we're sitting here, our board of directors are in one of their quarterly meetings over the, including tomorrow. So I'd just be praying for our leaders as they gather together, as they lead, especially with this new program of Redeem, which is pretty fresh. We're just adding members to it. It's still, I don't know if it's technically beta, but as they're looking at that and trying to refine it just for wisdom for our leaders.
Absolutely. Appreciate that so much, brother. Again, folks, Joel Noble, the Director of Public Policy at Samaritan Ministries. Joel, thank you, brother. God bless. It's great to have you on today.
Thank you. Appreciate it.
That's awesome. Good stuff, folks. Hope that you're able to be encouraged by that, especially if you are a member of Samaritan Ministries. I know I am. Mark, you've got great testimony as well of how Samaritan has blessed you, but just a tremendous blessing to have them. I was on one of the big healthcare groups back in my old days, and Samaritan's just way better. Just way better. I mean, there's really no other way to spin it.
I look forward to digging deeper into that, the Samaritan Medicare coming alongside Medicare and seeing how that works, seeing how the benefits work with Medicare and all those kind of things. And maybe someday in the future we'll come back with an update on that.
Yeah, absolutely.
Everybody.
Absolutely. Good stuff. Well, Mark, I had a couple interesting headlines here that I wanted to share with you before we get to the ag report. We did see the U.S. national debt reached a record. It's almost $38 trillion. In the past month alone, the debt's grown by $400 billion. That translates to roughly $25 billion per day. That is almost, it's laughable how much money that is that we're going into debt.
It's only laughable because we don't want to cry. That's what it comes down to.
And it's a number that's so big, it almost boggles the mind. It almost doesn't mean
it's not almost.
It's exactly
It's not almost. It's like saying infinity.
Right.
$1 trillion. Nobody understands what $1 trillion really is, and 36 trillion or whatever. It's outrageous, and yet it's a political football. And everybody's claiming it's everybody else's fault and this kind of thing. But the bottom line, it comes down to Congress is bankrupting America. Congress is doing it. And what we're seeing is instead of doing what's right, they're buying votes with more and more benefits and trying to create a larger backing for their party instead of the other party and going back and forth. And I've been really vague on this, but right now it's the Democrats that are keeping the government from being open. It's the Democrats who want to give all these benefits to those who are not citizens. They want to continue giving benefits to people who don't need them. And there's I saw several reports, and one of those reports actually said that up to 50% of our budget is truly waste and unknown where it's at. So you think about this. If we could clean up the waste, the money going to places, waste and fraud, we tried to do at the beginning before the world erupted and they kicked Elon Musk aside because he was shining a light on the ugliness and the waste of our government. If we could get rid of that, we'd probably have a balanced budget very quickly. If we could just have other
Mark, let's keep on going here. Sam, why don't we pause the ag there for just one moment? Because Mark, I want to hear the rest of your thoughts there, folks. We'll have the ag report on the website today. But Mark, why don't you go ahead and pick up where you left off there?
Okay, for example, able-bodied Americans, people who could go to work but aren't because they were raised in an environment where they were told that the government would take care of them. Yeah. Well, why would we continue to do that instead of having them go to work, become productive, start getting some self-esteem, and helping themselves as well as the rest of America not to shoulder the burden of that? So there's a lot of places. There's also some playing with the numbers that I really am concerned about. For example, we always hear about about baby boomers and the burden they're putting on the shoulders of Americans since they go into retirement and Social Security, blah, blah, blah. But, the reality is right now we're very close to more baby boomers dying a year and leaving, obviously, the Social Security than those coming in. We're very close to that within a year or two. And after that, it starts reversing, so that burden is going to go away. But in all the projections I've seen, they just carry on that same burden as if it's going to be forever, which it isn't. It's a big bump in the social services that are needed for the elderly. That's going to come down a bit. So there's a lot of calculations that I question that are being used as a political football. There's a lot of waste. There's a lot of fraud. There's a lot of money going out that no American would really want to go out. For example, in Medicare and Medicaid, why do we pay for elective procedures? Those that aren't necessary are essential. Let's just get rid of those. If somebody wants to have their body changed, that's up to them, not up to us.
Yep.
Bottom line.
It's well said, brother.
If it's not an essential life-saving type of thing.
610-363-1110. Mark, I appreciate that a lot. Again, 610-363-1110. Join the conversation, folks. Call in right now. We'd love to hear from you. More on the other side of this break. We'll be right back.
Are you tired of the chaos? There are a lot of things that make noise, but only a few that truly matter. As a parent, I want to leave something that will last for a long time.
You invest $300 a month increase on unmanaged by the time you retire.
Not just an inheritance of money, but a legacy of godly values.
Here at Financial Issues, we want to help you grow your money, but our main goal is to help you honor God with the money that He's given you.
Invest your money in a God-honoring way. Go to financialissues.org.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
610-363-1110. Mark, I feel like I blink and the segments just zip on by. Now we're in segment 4.
Absolutely.
Always the way it goes. I know one person in the chat, at least it's not just him, a lot of people want this, but Brian from Missouri, your home state there, Mark, or near where you guys are, saying it's wonderful to have Mark on every day taking calls. Now just make it 2 hours a day and we're spoiled. Brian, I love that.
We have the same heart, Brian.
We sure do.
Looking forward to the day where we can expand this again and start enlarging the show. And thank you for that. Thank you for the support, and thank you for the kind words.
Yeah.
We like spoiling the audience.
It's fun to do so. And once again, listen, folks, you guys made it all possible. I mean, you made it possible for us to spoil you in coming up and showing up big time, bigly, as our president says, in
bigly.
September.
Never like this before.
We've never had a campaign like this before. No, it was really, really amazing. I mean, we were in the plus over $30,000. We ended up raising over $192,000 of the $160,000 that we aimed for. So credit to you guys, man. It was just an awesome campaign. campaign, and that puts us on solid footing as we start this fiscal year. So the things that we want to do, updating the tracker, extending the show, those are all possibilities, and it's awesome to see that. It's pretty cool. Mark, let's get to a question here. Adam is 46.
Okay.
And Adam says, hey, Mark, I'm ending a government career, but I'm still working, and I will roll over a TSP, it's both Roth and traditional, into a solo 401k. The bulk of the money is in the TSP. The rollover creates cash to equal about 70%, and that's going to skew my tracker. Most of the holdings purchased are 1%. Yeah. So most are below your 3% mark. If I bolster my performing equities to 3%, I'm a little concerned I'm buying overvalued positions. Should I put this new money only in buy list positions, and should I plan to enter the market over a span of about 6 months or so? It's a good question, Mark. What do you think?
Adam, brilliant. You're thinking through it. Your logic is right. It's right on, and it's solid. There's sometimes it makes sense to go ahead and jump back in. But if the markets are overbought, if our buys are still a bit overbought, granted they're for the long run, but it doesn't matter if you get in today or wait for a few months to see if there's a pullback. You know, there's those kind of things. Of course, you could dollar cost average in. There's different ways to do it, but really strategic allocation is the key, step by step. Yeah, with that 70,000, everything's going to be out of whack. So you might want to go one step at a time. I wouldn't pour much in just to bring the, let's say you have 10, 15, let's just say 10 stocks for ease of conversation that are undervalued because of that 70,000. Now they're down to 1% instead of 3%. I don't think I'd just pour it in there. I'd dollar cost average in over the next 3-6 months into those that you're holding on to. And then the new positions that come on, you might want to buy into those, because I think we're trying only to put a new buy if it's a good, if not only is it a solid made company that's designed for long-term value and growth, but that it also is a good entry point. So if you see some new buys coming into the portfolios, you could go ahead and fully fund those up to the 3%. And there's no rush. Don't worry about it. It's not like asset allocation are these strict guidelines and every day you got to get up in the morning to rebalance your portfolio. We have to use logic and we have to use wisdom on this and move in a way. If the markets had pulled back already, if we were, in the bullish percent, if we were down below 50% of the bullish percent of the New York Stock Exchange, I'd probably say, hey, just go for it. It's pretty good across the board right now, but it's not. It's still overvalued. So go slow, take your time, dollar cost average in. We're seeing some pullbacks. There probably are some stocks, and maybe I need to be talking about those right now that do have on our buy list that do have a good entry point at this time. Maybe in our shows coming up, I could do a little bit more of that, or maybe in our commentary that just goes to you and the other partners. We can talk about that a little bit. But thank you for your question. I think your logic is sound.
That's awesome. And, Mark, for Adam, too, he's got that 70% that I assume, it's going to be sitting there probably in a money market. There's great value in not losing. I mean, the money market rates, it's going to be right around 4%.
Yeah,
nothing
3-4% in there. Yeah. Right? That's a good place to be. And if you decide, you said you're 46, so you're much younger than I'd probably, but you're getting to where it wouldn't be bad to be considering some income situation. So you might even be pushing some of that to some of the income or the other areas that might get a little more interest on it. If you wanted to store some of it in like the Timothy plan, fixed income for a while, 10, 20%, and then slowly back out of that as you dollar cost in elsewhere.
It's great stuff, Mark. And a headline that is a bit related to what Adam was talking about here. We do want to keep an eye on U.S. Treasury yields, Mark. They actually dipped earlier this week. The 10-year yield fell further from the 4% threshold. Sam, can you correct me if I'm wrong on this, but that was a little bit of somewhat of a historic moment there because we hadn't seen it fall under that 4% in quite some time.
Yeah. I'm thinking, was it April?
I think so.
Of this year?
I think so. So it's been a while. Mark, what do you think about that?
Well, it makes sense. As the market started pulling back last week or so, investors, when they start harvesting their profits, what they do is they start going into defensive situation. Well, obviously, treasury bills and things like that are where they start dumping. The more money that goes into existing bills obviously runs the price of those assets up. And as the price of a bond, it raises, the interest rates come down. It's a natural thing. It's not a knee-jerk reaction to the markets. It's just a natural thing that happens, and we may see it go back up, but who knows? More and more money might be pouring in that as we pull back more, if we pull back more. So it's not a bad thing. But one of the things that gets me is if interest rates go up, the media screams about high interest rates. If the interest rates go down, the media screams that we can't get interest rates for our investment. So no matter what happens, no matter what happens, we lose, because the news is made up in sensationalism, not of wisdom, and not of patience, and not of peace. So they get your attention with the sensationalism. I don't even think it's a newsworthy of talking about at this moment.
Good stuff, Mark. Let's get to another question here. We got Dave, is 59 years old. He says, hey, Mark, I'm actually now 59 and a half, and so I've set up an IRA in my Fidelity account so I can roll over my 401k. This will allow me to have full access to the equities on the buy list and follow the BRI mindset. And Dave says a hearty thank you for this, Mark. That's great. So Dave says, my question is, since my 401k is mutual fund based, is there a best time of year to convert since we're now in Q4? I've heard that mutual funds pay out at the end of the year. Should I roll over in January, or should I just do it now?
Excellent question, Dave. And yes, there is a better time of year. That's the time of year when the mutual funds are going up. If you can tell me when that is, please do, by the way. No, there's no special time of the year, Dave. I appreciate what you're saying, and it is a bit confusing on capital gains being paid out in mutual funds. That happens every year, or almost every year they have capital gains to pay out. But what happens, let's just say, a way to think about this is when capital gains are paid out, you have this bucket of stocks and everything, and it has growth, and the manager has sold off things, and there's capital gains in there. When they pay it out, it actually leaves the fund and goes outside the fund, so it's actually paid out of the fund, and you'll see the fund actually decrease in price. Now, those people who are reinvesting their dividends and capital gains, it's automatically done, but first it has to go back out and come back in. So effectively, the price of the mutual fund goes down when they pay it out, and then it comes back. And so there's no real reason to worry about that. Any time of the year is fine to be moving, especially if you're moving from ugly, evil, terrible stocks that grieve God's heart, and you can move them into an investment portfolio that is an act of worship and an act of joy. Go for it. There's no financial earthly reason not to.
It's great, Mark. A couple more headlines here. I found these kind of fascinating when we're looking at energy, gas in particular. It looks like gas prices are flirting with that $3 a gallon mark. It's the first time in 4 years. So that's exciting stuff, right?
Yes, it is.
All
absolutely.
This, though, Mark, is happening while oil prices are rising. They rose today after the U.S. imposed sanctions on major Russian oil suppliers.
Rain on our parade, Seth.
Exactly.
Come on.
I mean, what's going on here? These wet blankets.
Okay, everybody raise your hands as we get on this roller coaster. You ready?
Here we go. Join us, everyone.
That just goes to show that the news every day can influence the markets, and obviously politics do, wars do. We're seeing negotiations go on in Ukraine, and we're seeing that 2 days ago gas prices are coming down, which are partially based on oil prices, and then today we see oil prices are going up because of sanctions being put on Russian oil companies and others. So we're going to see a roller coaster like that. Nothing to worry about right now. It's just the normal day-to-day things. Over the longer trend, we're seeing gas prices come down, and that's what I'd be watching as we look at that kind of thing.
That's great, Mark. Boy, it came fast, didn't it? End of the show always comes.
Yeah, it comes way too quick. In fact, I'm looking forward to tomorrow's show. And on tomorrow, we're going to be answering a whole lot of questions as you join us here on Financial Issues. And we so appreciate you being here with us. And we appreciate more than anything else your heart, listening to God's tug on your heart to invest with biblical integrity. Thank you, and God bless.
If we ever forget that we're one nation under God, then we will be a nation going under.
Thank you for joining us. This has been an FISM production.